All right. Good morning, everybody. Hope you're having yourselves a fantastic Wednesday, I guess. I've had no idea what day of the week it has been here so far this week, but yeah, excited to be here. Looking forward to what should hopefully be a little bit of a smoother trading day. Um, I wasn't super happy with how I traded there yesterday. I kind of think I got maybe a little bit lucky to a certain extent. And so today is more about trying to like be back to where I was Friday, Monday, right? That sort of range. I don't want to catch all the trades. I want to catch the easiest trade. And that's very much the objective, right? Or the, I don't know, call it goalpost, right? That I'm looking for here today, or the one that I'm shooting towards. So hopefully, right, we have a little bit of a smoother session. We don't have Trump speaking. We're not going to have Powell speaking. So it should be a little bit smoother from that context. But if things are just slow and choppy and like they behaved yesterday, I don't want to get stuck in basically like an hour's worth, 2 hours worth of just grinding PA before something finally eventually breaks down multiple hours later. So today, really all about controlling the variables as that I can control, being deliberate, right? Being smart with my decisions and allocating my capital with just like control, right? That's ultimately the objective. Not to suggest that yesterday wasn't, but on a day where I take as many trades as I did, it's too many. Like you're putting yourself in situations where you're unlikely to make a good decision, and so just flirting with that just feels like it's something that should be acknowledged. But yeah, besides that, still happy with how I managed my risk. Happy with how I kept my sizing really tight. I think what was interesting about yesterday is we had like 5 point stops multiple times on NQ, and that's a pretty fun place to be. So we'll see if we can get something to set up here today and we can get some reasonable follow through to come together. But I am optimistic. I am looking forward to today's trading day. And yeah, excited to be here. And let's see what markets have in store for us here this morning. From an economic calendar perspective, it should be a little bit of a smoother day, right? We don't have any Fed speak here until after market close. So that's very, very positive. And then obviously, new home sales should be something of interest. But then obviously, big one here today is just going to be crude oil inventories. So yeah, let's start mapping things out. Let's go from there. But it doesn't look like anything too crazy, and we should be in reasonable place here. That's what I'm looking for. That an inside bar kind of looks like it is right, or we did not make a higher high above that. The very most it touched it. So we are going to call this an inside bar here. An inside bar with increasing volume generally isn't my favorite setup, right? Like if bears were strong, why couldn't they make a lower low? Basically, is what that volume is telling me. So I do want to be a little bit cautious with that. Now I could probably explain away that volume pretty easily here today, right? With just like there being Powell speaking and Trump speaking, that's definitely two intense, we'll call it backdrops, right? For sure. So really looking forward to see if we can get a resolution of that maybe today and then go from there. To the upside, we're going to be targeting 60, right? That's not going to be particularly changing. And then to the downside here, we're going to be targeting 67, maybe 67.10. That's going to be our pre-market low. And then going down towards sort of those Monday lows, right? Which is going to be 6,700 and then down towards like 66.80. And we'll go one extra stop there along the way, and that should be plenty of space for us. Okay, NQ, same. It looks really similar, right? Kind of touched high price, but didn't break out through it. I'm going to call that an inside bar. And then to the upside here, we're looking 25,000 as our starting point. We're 24. We'll call 25. Yeah, 25,000 as our starting point here this morning. Pretty big psychological level. And then through that zone, right, or to the downside here, we're looking at what, 800 as our starting point. To the downside, I would anticipate that that gets taken care of by the opening range indicator. And then, yeah, we're looking at like 600, 700, 500. We could go maybe down to like 3. And yeah, hopefully smooth session. How's everyone feeling this morning? Everyone feeling good? Beautiful. All right, so today, right, we've got 10:30 data. So probably won't trade CL super aggressively. So this is a 3 for 3 here to the upside, right? Yesterday, green candle, green volume, right? And then today, so far pre-market, we've got green price action. So it should tell me that it is a bullish day or bull trend. I mean, our upper range here would be kind of like 65. That's sort of where prices stalled pretty effectively. So that would be the starting point here to the upside, right? 65. And then go from there. Like we're then looking 66, maybe up towards 68, 70. So I'd probably just go 68 here today. It's already been a reasonably large pre-market move. So I maybe wouldn't expect it to give me like just smooth follow through immediately, right? Maybe it's a little bit slower here this morning or waits for that data just because so much of that move has happened. And then the other element, I guess, that we want to sort of respect here is that we've seen price action just effectively consolidate, right, inside this quote unquote channel now for the last like month or so, right? So, or pretty much for all of September. So I don't think it would be too surprising for us to get a rejection off of these highs going into inventories. And we would probably expect to see, right, more volume than what we saw there yesterday. So if I could get an ORB fake out slash rejection at the upper trend line, then I can get a breakdown towards, right, say like 63 here. So I would like to see rejection like 65, even something like this, right? The high of that range kind of going forward, and then could go from there. So we'll then go 63, 62.50, 62, 61.50. Again, plenty of space to the downside, right? If we can get that to kind of cooperate, but let's cross that bridge if we get to it and if it wants to show up. I would be potentially interested in trading CL in the run up to inventories if I can get a really textbook bullish play. I guess like the pattern, I guess, or the bigger picture there is that very often on inventories day, it's like a positioning trade beforehand and then a flush or reversal post data. We seemingly are getting a pretty good like ramp up towards it. So that is what makes me feel that it could be potentially like a little bit of a flush. And if that is the case, right, then the reversal is going to occur 1025 to like 1045. So that would give us maybe like an opportunity for there to be a bit of a squeeze move on this here today. But we'll cross that bridge if it happens. But I would be very interested in that type of price action. All right, Apple, red candle, decreasing volume gap up. So 1 for 3 here to the downside, effectively a day of consolidation, right? In the same way that the indexes had one. Same thing on Microsoft, 1 for 3. I saw a lot of people, like social media's not necessarily a very good arbiter of truth, but I saw a lot of people there calling yesterday's rejection or these sell-offs like as the generational top is in. I think it's probably a little bit too early to make those types of assumptions, especially with this lack of just general volume, right? Tops tend to not happen on weak volume profiles. So let's see if something does end up changing. I certainly would not be opposed to trading a trending bearish market, but the key element there is trending, right? That's really all I care about. And I think that's all we should just care about in general. It doesn't matter if we go long or short or buy or sell. We can make money in both directions. And yeah, I think it's probably a little bit too expensive to just be calling tops and bottoms in that way. Okay, AMD, 2 out of 3 without volume. That's not changing. Meta, red candle, decreasing volume, gap up. So again, 1 for 3. Netflix, it's really consolidating inside this Wednesday range, huh? And he really needs to break out. So we're not going to call this an inside bar this time, because it's not. We're just going to say it needs to break out from Wednesday's range. Cool. And then Google, like an inside bar. Sweet. And then the old Vixaroonies hanging out at 16.35. So a little bit of, extra implied volatility, or like a little bit extra oomph or momentum, or whatever you call it, could be potentially in play. Now, we're not getting anything insane with this reading, right? Implied range is still less than 1%. But we do want to be a little bit cautious here, see if we can get ourselves a nice little bit of oomph, and hopefully we can get a little bit of follow through to kind of justify us, taking on some risk here today. Any questions here this morning, team? Anything maybe that I haven't touched on, or anything along those lines? Hey, good morning, Jack. All right, sweet. So we got about a minute till market open here. Let's see how this day comes together. All right, so 20 seconds. Let's see how the day shapes up. Yesterday was chaos. Yeah, I did not enjoy yesterday's trading day. Hey, good luck today, Joel. Take it slow, okay? Like, build up your way of controlling your dopamine, right? So, like, first day of starting an eval, or first day of getting funded, or being really close to a target of passing, or getting to a payout, it often, like, we trick ourselves into thinking we have to rush to get there. And it's not the case, right? So, very much in trading, slow is smooth and smooth is fast. And I would really take that to heart if you can. Yeah, exactly. Like, you make money by surviving and staying in the market, pretty much, right? So it's how can I ensure that I optimize for that? Because then the money will follow. Not bad, not bad of an opening range. Would give us a target of pretty much spot on 800 at the moment, which is nice. Hmm. Not a huge range on ES. NQ looks a little bit better. I mean, Apple's pretty aggressive dump there. That's probably most of it. Much better volume than yesterday's open as well, which I think is a promising sign. 51 points opening range, pretty good. Okay, so now we're trying to judge, right, what the second candle of the day looks like. Is it a clean breakout? Is it a rejection? Is it a reversal? It'd be surprising if we got increasing volume on the second candle. It could happen, but I would be potentially surprised. No need to rush this price action here yet. Let the trend establish itself, right? Let a narrative establish itself, and then we can catch a bite of the juicy middle. You don't need to be in a rush to catch the first move of the day. My job is to catch the easiest, I would say, is the first priority, and then the best. I think yesterday I didn't really try to catch the best move. I tried to catch the first move in anticipation of it being a choppy day, maybe. And that's a limiting belief that I need to get rid of. We have an outside chance here of increasing volume showing up. A little bit maybe unlikely, but let's see. Okay, so no, and it's technically a fake out, right? It did not close outside the opening range. I'd say realistically, probably better to switch to a longer time frame in the short term. Like if you're going to play a downside signal, like it would be just nicer on the 5. But I would say that we're just generally missing the volume. Now, if this candle can break out from inside the opening range or away from the opening range, give me increasing outlier volume, break down under 828, whatever it might be. Pretty nice. And remember, right? We get paid for our decisions, not our time. So I'm not going to miss out on too much here, right? If we don't chase this, we want to optimize for high quality decisions, not as if like the market owes us something. Sonia, I was so sick for so long. It was insane. Like, yeah, no longer completely stuffed up and dying. It's nice. Okay, so there's a new lower low. We'd like to see this thing break out and hold on volume here. See if it happens on the 2-min. Holy shit, trading view. Come on, speed up. Okay, decreasing volume, so can't. But potentially here on the 3. Yeah, I did one on what you call it, Monday. I did like a 11 or 12 kilometers on Monday. That was really good. A little group run thing that I do. But yeah, just got healthy in time to get sick again on another flight. So good times. No, it's all good. Okay, so again, not increasing volume on that breakdown. That's maybe a little bit of a pain in the butt. Same thing on ES, not increasing volume, and actually isn't even an outlier, so wouldn't really give me an opportunity. That again probably sets me up to keep looking at the 5, but the 5's almost behaving as if it's the same thing as what the 3 did. Yeah, to fly private. I've got $1 million, I'm sure, for a flight across the Atlantic. I mean, deep down, I do not really enjoy spending money very much. It makes me feel very guilty. So, my immigrant parents did a good job making me frugal to the point where I don't think I would ever buy a private flight. And still not that increasing volume, which is disappointing. Poland. They're Polish. I think it's a time thing, right? I think it's a time thing. I'm going to London for my friend's wedding. Yeah, it does seem a little bit more like maybe a fake out early to the downside versus a very clean breakdown. We've seen effectively like 2 fake outs here, consistently decreasing volume profiles on even like the very micro short term time frames. No. I mean, you guys can see the schedule I posted right inside the Discord, right? So I did update the stream schedule chat. So I will be taking, because the wedding's on the Thursday, so I'll be taking the Thursday, Friday off, but it'll be like normal. Again, not quite the volume I need here on ES, right? It's just decreasing. Yeah, stream will be normal Monday, Tuesday, Wednesday. Then yeah, Thursday is the wedding. Friday is managing the hangover. Yeah, that's smart, Marcus. Nothing looks interesting yet, which is kind of annoying. We might end up having to wait for new home sales data at 10 a.m. here to get some sort of like enthusiasm trigger this morning. Yeah, after that opening volume, I may be expected of just a tad bit more enthusiasm and just like slowed up or slowed down right at the very end. Ooh, there was a rejection. Yeah, not going to be increasing volume here. Increasing volume on ES, not the right candle. All right, so we would needed that to have been a red candle, which it is not. Can't say that it's bearish confirmation if bears don't finish in control. Similar thing here on the 5. We have an increasing outlier volume, but it didn't hold under previous low of day. So kind of tells you more indecision than a breakout, right? If the breakout is strong, it's not going to fail at its first attempt to do it. And that kind of looks like potentially that. So I would need to see that area now hold through as well, which I think maybe is a little bit less likely. It's kind of a weird open. Does feel a little bit like we might just be setting up for, yeah, a bit of a later in the morning move. All right, I'm just going to go fill up my coffee. Be back in a second. All right, sorry, I'm back. So again, right? Like not this isn't a breakout that we wanted to have chased because it failed on confirmation, right? Volume was good, but the candle didn't break, close, and hold under basically where we needed it to. So again, forces you to kind of slow down a little bit. If it's within a point or two, you can maybe excuse it. But when it's obviously the difference, or it obviously looks like a doji, it just kind of gets scary. Not enough volume by the looks of it on that 3 min, and then same thing, like the candle kind of towards those lows doesn't exactly inspire confidence. So let's even get a breakdown on one of those 5 mins or something. That's probably a little bit of a smoother look. And again, we're looking for that increasing outlier volume. CL effectively not in play here going into inventories. Maybe not as enthusiastic as I would have hoped. But let's see. Okay, so now it's starting to break down. So an inside bar is a part of the 3 for 3 system, right? It's the equivalent of a 1 for 3 or formal consolidation, i.e., non-trending price action. So what you want to see, right, is you want to see the open establish larger volume than the previous day to indicate that there's a change in personality. So that's effectively what we had here today, right? Today's open significantly larger than yesterday's open. So we can argue, right, that there is a increasing enthusiasm maybe that we haven't seen before. Okay, so we've got a setup here on this 5 min time frame on NQ that broke down, increasing outlier volume, right? Held through low of days and did so on a full body bearish candle. The big concern, I guess, with this, right, is just the time of day. And like it doesn't necessarily give me a ton of time to let this move play out prior to data. I'm going to be a little bit patient. Okay, so now we'd be looking at the aggressive technique here. It'd be like an 8, 17, 75 stop loss, right? Something along those lines. Based on that, that's 13 points of risk. So it's a 1 contract play. And I'm not in a huge rush to execute this trade. If I want, I could maybe even do it on the 3 min time frame to keep it a little bit tighter. Just because I am a little bit worried about the like overhanging data, right? So like I have to get out of this a minute before 10 a.m. or like before 10 a.m. strikes. So I don't want to necessarily be hyper aggressive or like expect that I'm going to get monster mega follow through. This is what we'd be looking for here on the 3. So 809 would be the stop loss for now. I could go 2 contracts on this on the 3 min time frame. It's a little bit more reasonable. And let's see if this thing wants to, basically maybe fake out here above these highs. Again, like I'm in no rush to execute a trade here. It's got to be absolutely perfect or I want nothing to do with it. It is rejecting pretty well above. Let's see. Hey guys, I am in average price 801 on the dot, two contracts, stop loss 809. Short. Oh, just got stopped out. Minus 320. All right. Quick 30 seconds. Okay, so that is telling me a potential reversal signal here again. 6 minutes going into data of a little bit of time. Clear 800 rejection at this point, right? Let's see. Would prefer the aggressive. But let's see. That'd be an 803 stop loss then to the upside again. 15 points. The one contract. Or if we go stop loss at low of day, I could do this. That again would also be that same 15 points. So 783 would be the stop for now. And we'd be looking now aggressive technique here. So 800 would be the stop. Reference price 8, say 16. Okay, guys, I am in 810.75, 810.75 stop loss at 800. Two contracts. Hmm. Okay, see if it can go here. It's got to start pushing ASAP, or I just got to get out. I'm out. If it's got one more pop in it. There's 250. We got about a minute till data, right? So I have to close this before. So I am looking for my exit here, guys. I'm looking for my exit here. Come on. All right, guys, I'm out at 8:12:25. 8:12:25. I am out. I just don't want to hold this going into the data. Okay, maybe a little bit early. This is the better exit here at 8:16 or 8:21. And we'll reset this, right? So we're just basically waiting for the data just to avoid potentially an algo shakeout. This original idea at 951 has not been invalidated. I just don't want to get stuck in a nasty wick prior to it making a move, right? So we got out before that trade closed. Could have maybe held out for a little bit longer. Okay. And so we're back in business, right? We're willing to trade this idea. Again, we're just trying to avoid the shakeout that potentially happens on data, right? When it drops. We're still looking at the 3-minute time frame, and it would be the aggressive entry technique. So it'd be stop loss 812. Maybe want my reference price to be there-ish once it makes a higher high. Okay, so for now, stop loss would be 812, right? Let's call it 811. Okay. Not really a market that's moved a ton yet either. It's kind of annoying. So let's see if we can make a higher high. Still no reason to click submit here yet, guys. So be patient, please, right? We have to see it make a higher high, right? At least. Or if we can see this candle close and then establish as like a little inside bar fake out, that would also be reasonable. But as is, we can't enter on this candle yet. Okay, good decision to get out where we did, albeit not perfect. Okay, possibly a little fake out now. Yep. See how it closes. And then your fake out low would be your stop loss, right? So that'd be 802. Call it 803. I'll call it 802. Okay, guys, I'm in 808.50. 3 contracts. Stop loss 802. Come on. Trading view drives me nuts. All right. Did retest entry price. Oh, what an entry, guys. What an entry. All right. So, I mean, that's $1,300 right there. I'm taking it and running, guys. I am all out. I am taking it and running. I am all out. That happened faster than I expected. I'm not going to say no to $1,300. I'm taking it. I'm out. So got in. That was a 5-second trade. I am already out. And yeah, beautiful, beautiful exit. My exit price on this was $32.25. $32.25. And we did a very good job, guys. Very good job managing the fake out, waiting for that to happen, and then jumping in. Let's go. Oh, it makes such a difference, right? Making decisions out of control. Hey, $720 is a great day. Nice work, John. Sonia, let's go. That make you pass? That way. And the reason, guys, why I close this so quickly is when a move happens faster than I expect, it's so easy to get greedy in that situation, right? Where it's like, oh, this just moved $1,000 in 5 seconds. That means every 5 seconds it's going to move $1,000. Generally not the case. When you see like those moves that happen faster than you expect, more often than not, it's a sign of capitulation more than continuation. So pretty happy with that, right? We closed near the peak. So that's great. The fake out entry maybe came together a little bit quicker. I do apologize for that, but well done here, everybody. That's awesome, John. Congratulations. That's 20 points in like 15 seconds. Well done, Speed. $1,700. Well done. Ant-Man, 1,100. Well done, sir. Let's go, Mike. Yeah, that feels good, guys. That feels much more controlled than yesterday, right? It feels much more controlled than yesterday. And like effectively on that thesis, right? We traded the same idea twice and we made money on the same idea twice, right? So I would view like this breakout and this breakout as the same trade, if that makes sense. Oh, Shiv, 100% call it. Like I'm not gonna take another trade here today. I'm pretty happy with that. Exit was 32.25, 32.25, 832.25. Yeah, I think we'd be very stressed, right? Seeing 60% of your P&L evaporate. But yeah, I'll just say, guys, right? The big perk of being a trader is you make your money or you don't make your money, whatever it is, but you're done for the day, right? You have a short window of where you're trading. You go enjoy the rest of your life. And then, at some point in the evening or in the morning, depends on your time zone, you go and you review your trading, you review your decisions, and then you set yourself up for a strong trading day. We don't get paid for our time. We get paid for the quality of our decisions. We've made 3 high quality decisions here today. 2 of them have been profitable. That's all I could ask for. I don't need to do anything more aggressive than that. That's like 13, almost $1,400 on the day per account. I can't complain. And everyone else is green too, which I think is fantastic. So again, can't complain. Hey, congratulations. First day on the eval and a nice green day. Congratulations. And so now we want to compound that good feeling, right? We want to make sure that a green day turns into a green week and that green weeks turn into green months, because those are what turn into FUs to your boss, right? I'm at 13 accounts now. So Friday, I think I passed, or Thursday last week I passed those remaining take profit trader accounts. I do think I'm going to be closing my top step accounts pretty soon. And I don't think I'll jump back in with them for a little bit. Well, it's not about necessarily testing your luck, but I think that there's like a reality that I think that I trade my best when I take, like I said in my journal, like 1 to 3 trades a day in general. No, they haven't called me to live on this set of accounts. It's just that I am seemingly getting like worse executions on my project X than I'm getting on my funded futures or my Tradeify account at the moment. So it's not that, but I feel like I'm getting a point or 2 more slippage on Top Step than I get with the other accounts. Yeah, 100% Sonia, right? The risk reward now is skewed, not in our favor anymore, like psychologically, right? So the feeling of now giving away this green day is going to disproportionately feel worse than doubling our P&L. Hey, congratulations, Scott. Well done. And yeah, Charles, I only trade 150K accounts. I get the lure of the 50Ks and all that kind of stuff, but for me, I care about the drawdown. Like having more drawdown is the most important. Yeah, I don't think I'm going to place another trade here today, Speed. And all things considered, like we've had an attempt for a breakdown that's failed, and we've had an attempt for a reversal higher that's kind of failed as well. What that tells me, right, is that if there is going to be a trending move, it's probably not going to happen for a while still. Yeah, you can get still trading view through the other ones. I would like to trade or at some point try some of the other integrations, like maybe the Sierra chart ones, and see if those executions or like those charting platforms are a little bit nicer. That would be a little bit more what I'm looking for, but we'll see. I think that's the perfect reason to sign off, Mike. Hey, Jason, congratulations. 3 straight green trading days is fantastic, man. That's really, really well done. And that's the whole point, right? You create that proof of concept for yourself in paper trading. You build that muscle memory, and then you take it to live and you have a foundation that you can rely on and build off of. So that's awesome, dude. Love to hear that. Hey, Felicia, congratulations. Almost 3K on the day. That's awesome. Yeah, so good question, Ghost. So about doing 15 micros, if I stick to the mini, should I just stick with one? Gives me $160 risk based on reference price, or lower the reference price to where I can get two minis to keep risk under 250. Only downsides, I'd be missing some of the bigger discount trades. So what I would suggest always, right, is to try to optimize for having the tightest risk as possible. So yesterday was a little bit of an ugly trading day because there was a lot of action and a lot of kind of uh like bullshit. But the reason why we were able to be green is because our risk was consistently like 5 points, right? So it makes it easy to be green, where you can take multiple shots and you can still eventually get that follow through, right? And get paid out. So the con of that, obviously, right, is that you probably will miss a few. You'll probably miss a few trades and you won't catch everything. But long term, if you zoom out for like 100 trades, you'll have a higher probability of making more money that way. So I would always, yeah, I would always try to optimize for buying the deepest possible discount that you can. And that will always correlate with more success, even if sometimes it will feel torturous because you're going to miss some trades. So you kind of just have to figure out the pros and cons you want to live with. I think that that's a better combo. But find find that. Yeah, I agree. And you make better decisions when you have less like anxiety when you're in a position, right? You don't compound mistakes. You're able to hold things for a full out win. It's a much better place. Yeah, Myra. So I would recommend watching the videos in the start here section of the Discord. It'll give you like a philosophical overview of, my strategy, how I'm trading, kind of like key documents that you maybe want to print out and use as a cheat sheet. And then once you've kind of gone through those videos, I would recommend beefing up your knowledge with the how to trade with DTR section. That'll go a little bit more into detail over like timing your entry and maximizing your P&L and being able to better replicate my strategy without having to chase my entries. So I think that would be the logical kind of path for you. And just to be transparent, guys, right? Trading is it's like learning a new language to a certain extent, right? The first week it's a little bit of like Chinese or it looks foreign, and it's like you don't even recognize the alphabet type thing, right? So that's okay. That's totally normal part of everyone's learning curve. If you watch some of those videos and then you come into the stream, you'll create a lot of that context you need to help slow down effectively your like racing thoughts. And that'll put you in a really good situation to be able to maximize your time here, but also find as much profit as you can. The reality with trading, and I mean this in the best way possible, but we have to be very selfish in our desire to get better. You can obviously copy and you can make a little bit of money, but you're you're gonna still make mistakes when copy trading, and so you have to learn on you have to learn how you or why you make mistakes and how you can manage them and avoid them so that you can avoid them in the future, right? And that's ultimately what your responsibility as a trader is, to basically be accountable to yourself to fix some of those psychological hiccups. And once you get that order of operations to be correct, then you'll be able to be quite profitable here inside the stream. So, yeah, I'm a big believer that trading is self-improvement gamified. And the more that we can take that seriously, generally, the better our life goes. Yeah, I can try to see if I can come up with an idea there. really the concept, right, is to look at it like the aggressive entry technique, right? So it's a little bit of context, I guess, right, to a certain extent here too. But if this is like my confirmation and this is what makes my thesis correct, this little fake out to 805 doesn't invalidate this 951, right? So if this is like my entry candle, right? And then, or this is like, I'm thinking, hey, this is like potentially another entry. We're getting a nice little breakout, good confirmation. And then I get a little fake out under. I've got no reason to think that the fake out invalidates my idea, right? Now, if it maybe broke down all the way to 785 and it was, a 50-point move, that's a little bit of a different story in a different context. But if I'm looking for the aggressive entry technique, all I'm basically telling myself is that I don't want to see, or if I see a lower low from this point, my idea is no longer correct. So if I see a fake out and I see bears fail at, say, 804.50, based on the aggressive entry technique or the philosophy behind it, making a lower low under that 804.50 would effectively then invalidate that idea, right? Because then that fake out turns into a breakout, and that would kind of invalidate my trade. So if I want to go aggressive entry technique and I see a fake out occur, that then also gives me a logical spot where we've seen bulls defend, or we've seen a thesis be defended. And if we were to invalidate that candle, there's a very high probability that my idea is no longer correct. So the fake out entry, or the fake out thesis, is more one that we're trying to apply contextually to our trading right now, because we're seeing a lot of that fake out choppy nastiness without things invalidating our trades. So we're just adapting to the kind of current market environment, and we're making sure that we're almost like buying our stop loss instead of buying where we normally would, if that makes sense, right? So if on the aggressive entry technique, right, my stop loss would be the low of this as my entry candle, the fake out technique means I'm basically just buying the stop loss, right? Or like I'm buying my stop loss. That makes sense? And then if I'm buying my stop loss, right, then my new stop loss, right, will be the fake out low underneath that price. That makes sense? And I will say, just in general here, Ghost, right? Like the first, I probably wouldn't worry about watching back yesterday's stream. I think that, I don't know if that necessarily would be very helpful. I would probably watch back today's 3 trades, because they're a little bit slower the way they come together. And you can see that fake out be a little bit more, like you can see it coming a little bit better, if that makes sense, right? I'm going to get the video editor to edit up all 3 trades from today. So that should, should kind of speed up that process for you a little bit. But yeah, I think today is a better example than yesterday. I would say like yesterday was a day I made money because the math behind my trading makes sense, not necessarily because I traded well, right? So I took trades where I had 1 to 10 or better risk reward pretty much on every single one of my decisions, and I had really tight risk. So I effectively just gave myself ammo where if something did give me some follow through, I was going to get paid. That is good until it doesn't work. But I wouldn't say that yesterday was particularly, like in hindsight, a day that I would be proud of. Today, much more. Today, I'm very happy with how I traded. We didn't quite top tick that exit. Probably could have gone an extra 8 or 9 points. But we also have not missed any of this move, right? So I think the read we had on that price action of when the move happens faster than you expect, right? It oftentimes does not actually indicate continuation, often indicates capitulation. We're kind of seeing a example of that, right? It's like an exhaustion event by bulls, and now they've just spent the last 20 odd minutes basically catching their breath on pathetic volume. No, Mark, I don't. My goal each trading day is to follow my rules and to execute my plan and to behave how I said I was going to behave, right? That's what I'm tracking on a day to day. If I take care of those variables, then the P&L kind of falls into place. It does its own thing. It rewards me. I don't like I don't like daily P&L targets because for me at least it's too easy to like fixate on that number and attach my self-worth to it, which is I think not particularly healthy. So no, I'm not really a big believer in it. I um like I played a lot of goalie, or I was a goalkeeper pretty much in every sport I played growing up as a kid, be it like football, soccer, or like even hockey, things like that. And what I like to do, or like what I was kind of known for, I guess, among my teammates when I was play, is I would never know what the score of the game was. Like I would never allow myself to watch the scoreboard, to keep track of how many we scored, or to do whatever. It didn't make me play any better. So I like to adopt what I call the 0-0 mindset, or just view things from that perspective. My P&L every day is 0-0. I almost like don't care on an intraday basis, or I don't even give myself the memory capacity to like remember what my P&L was yesterday or the day before. I don't think about those numbers. It doesn't make my trading any easier. So like yesterday, the objective I had for myself is I wanted to take between 1 and 3 trades. I wanted to trade in control, and I wanted to be very deliberate, right, with my executions. That's what I'm judging myself off of today. And so this morning, right, I wrote that down on a piece of paper. I have that piece of paper in front of me, and I can confidently say that I did all 3 of those things here today as like a first principles approach. And because I did those 3 things, my outcome is what I would like determine to be reasonable or good. So I don't care about my P&L on a daily basis. I don't really even care about it on a weekly basis. I think that can still be a little bit noisy. And so, yeah, I tend to only really think about it from a longer term perspective. There's not really a point where I made so much in a week or a month or whatever that I take time off. Like we had a win streak of, I think, 27 trading days for a good chunk there in the summer. Where is it? And so, yeah, so we did from 85 to, yeah, it's like 26, 27 straight days of green. And I did something like, what is that now? Like 320K over a little bit over a month and a half. And I didn't take any time off after that. So for me, right, it's kind of like you trade until the market tells you you need to stop. Then you start to get your butt kicked for a little bit, right? Like a week or I don't know, a couple of days, or you realize that you're not as hot as you are. And then at that point, that's when you go take a little bit of a break and you reset and you do whatever. In general, I would say that I'm very bad at celebrating my wins or like good periods of performance because it's like now what, right? Like yeah, 300 grand's a lot to make and that's a really good year, but it's not enough for like me to retire or to never have to work again or to not do whatever. So yeah, it is like a little bit um yeah, wins, just the feeling of a big win degrades very quickly. And yeah, I think just being process oriented and like really living that life or like really embracing the not giving a shit about the dollars, it's that's the cheat code more than anything. And yeah, I like trading. It's like one of my favorite things I do every day. I don't always like it. Sometimes I freaking hate the market, but yeah, I couldn't really imagine doing much else. I don't know what I'd do with my time if I didn't trade anyway. Yeah, that's probably the thing I see, the difference I see between like kind of experienced traders and traders who are still struggling to be profitable. Usually the experienced traders, the one who've been playing for 10 years or whatever, like they're very financially motivated, but they also don't believe that money is real or like they don't give it any value. They don't put it on a pedestal. They don't care effectively about the dollars and cents. And I think that that is a cheat code for your trading. If you can get to that point and you can be detached from the outcome and you can get off of the P&L roller coaster, then the only thing to evaluate, right, is your own internal decisions, your own internal dialogue, your own trading decisions. And that's like where people get their fight or flight moment, right? Because it's really fun to study your trading when you're making money, but it's really challenging to like confront yourself to try to get better when you're getting your ass kicked financially. And the more and more you can detach the two or uncorrelate the two, generally the better you go. Do I see a bullish look on NQ here still? I would say generally no. Like the volume has completely dried up. What it reminds me of is kind of like the drift we saw there yesterday, right? For kind of like the second half of the morning session. I'm not sure if I see anything that's like dramatically different than the kind of bullshit we saw there yesterday. I got to stop using that word as a filler word, but with this market, sometimes it feels like the most appropriate phrasing. I don't know. Any other questions here, team? Like, if anything, right, I would look at it as you'd want to break out either above 842 or under 784, right? If you can get out of that range, out of that like chop consolidation, whatever you want to call it, that would be what I would probably be looking for, especially to the upside. Like a breakout above that 842 would at least give me a reason to think that there's a difference in the price action. Yeah, like trading is it is a game of self-reflection. And yeah, it forces us to confront ourselves and to not bullshit ourselves. And that's really uncomfortable. I did watch a bit of the Monday night. Yeah. Pretty impressed with the Lions. They're no Eagles, but they're pretty good. I don't know what's going on with Derrick Henry this year either. He's got something like 3 fumbles and like 60 touches or something like that. It's sad to see the Bills, or sorry, the Ravens just constantly finding ways to choke away games. Oh, I mean, would I be looking at possible reversal on CL? I mean, data just dropped. So 3 minutes ago, that's what that big sell off is. I would say that probably today, CL for me would be very, very challenging to trade with the inventories data. So generally, the setup I want to see on inventories day is prior to 10:30 there being a really big directional move in one way or the other, right? So like if we went today to like 64, 68, then that would be the opportunity where I would start looking for reversals kind of going into inventories. And then obviously to the downside, if we got to like, yeah, that 64 where this candle was, but at like 10:15, then I would be more confident in this. Um, Besides that, like if we kind of have a non price action day and then you get that big move, you end up just being next candle kind of like reversing back towards the mean or the middle part, and then price action basically just stalling there for the rest of the day. So like if I were to go back to last Tuesday, right? You got a little bit more of a run up, right? In the run up to it. So you got like a good breakout, two R move before, and then you got the reversal and the big rejection, and price action kind of trended that way for the remainder. And so that's more the setup that you'd be looking for. Same thing here, right? Big run up into the data. That's when you get that big rejection. And so that's more the thesis that I'd be looking at. If CL is just going to stall out and it's going to hang out by its lonesome there, I'm not super enthusiastic about wanting to trade it. It just not worth the algo whipsaw. I would say in general, CL on the Wednesdays, right? Like I would say 1 out of 10 Wednesdays, I'll get a trade on it. If that makes sense, right? So it's on a day like today, I probably wouldn't give it too much mental capital because it's a pretty low probability of just giving us a setup in general or one that I would trust. Yeah, don't do anything else, Chris. Right? Don't chase it. So Sam, right? If you miss that final trade of the day, I would not try to force something and like place a play because you feel as if you're owed P&L or something along those lines. I think that that's probably a losing decision there long term. Instead, right? I would just take the rest of the day off from the market, not place any other trades, and then find something that you can do in your trading that would have made sure that you don't miss the next one, right? So watching back the trade maybe this evening, doing a little replay in the evening, right, and getting a little execution off, and just improving your basic quality of your technique, right, to a certain extent. I think that would be probably more beneficial long term. The reality here, right, is if you then now take a trade, and let's say you get unlucky, right, and it goes against you, you're now going to feel extra tilted, right, for giving away that money and for making things worse, and that's probably going to compound into something that you wouldn't be very proud of. So I would fight back against that, like self-imposed pressure, and find a process-based thing that you can improve, focus on, and bring to your trading day the next day. Because that's going to make you a lot more money than like revenge trading to get what you feel you were owed today. That's just your short-term brain trying to make you make a bad long-term decision. It's annoying, but very much in trading, what feels best for our accounts in the moment is rarely what is best for us long term. Like our brains are addicted to self-sabotaging us. And if I basically just Costanza every psychological impulse I have as a trader, probably going to be much more profitable. So yeah, that's generally how it is, right? The opposite of what you want to do is generally what's best. It's dumb, but that's the way it is. Good work, Jeanette. That's fantastic. Like I as much as I love my strategy, I love trading the opening range and it's a really good technique. My edge isn't my strategy to a certain extent. Like I think 70% of my edge as a trader is my ability to lose small, right? Because it makes everything else so much easier and it gives me so much more margin for error that I can make a lot of dumb decisions and still be profitable. Whereas if I have that, big loss or I make a bad decision or I like compound mistakes, then now I got to do 3 or 4 trades to get back to being where I would like to be. And that's not great, right? Um, yeah, like the if the market's at all-time highs and my portfolio isn't at all-time highs either, then I'm underperforming, right? And the only way that I can insist or consistently outperform is to make sure that I am losing as small as possible. And I'm always one trade away from being green. The more that we can gamify for that and like make that our focus, the better trading goes because losses don't feel personal or as personal. Things don't compound against you as quickly. It's super easy to like make back your green day, right? If you only need to make 10 points to be green on the day, that's so much easier than needing 60. And just embracing that concept is really important. Yeah, Derek. So, what's a realistic amount you could start trading and building up your account with? I'm just getting started and want to make sure I'm doing this correctly. So I think this is where like working with like someone like myself is where it makes a lot of sense. Because what we try to do is we help people get funded at prop firms so they don't have to risk any of their own capital and they're able to basically trade risk free. So if you're learning how to trade, I would not recommend putting your own money at risk because your most likely outcome with your own cash without any trading, without proper coaching, is that you're going to lose all your money, right? So I would think about trying to find a group or someone who's willing to teach you or show you what they're doing, and then to use prop firms to basically de-risk yourself. So you'd be able to trade with like upwards of $600,000 by working with someone like myself and get to keep 90% of your P&L while also removing all of your downside liability. And then you can use that account or those accounts to make your first, say, 100 grand trading and use that to fund your own personal trading account. So, what my recommendation would be is to de risk your current learning curve, basically lose someone else's money. And once you get that proof of concept down, you're going to know basically how much you want to put in your personal account and you'll be able to grow that much more consistently. Any other questions here this morning, team? I think I'm going to head off here pretty early today. I went overtime yesterday. I'm cutting it early today. Yeah, I'll call that too. So we're pretty far apart. Hey, you too, Joe. Have yourself a great day. Yeah, you too, Antonym. Hey, enjoy, Robert. And then, yeah, once you're done to start here, go through the how to trade with DTR channel. They'll really, it'll be like a cheat code. Honestly, it'll be like a cheat code. Yeah, sounds good, Robert. That'd be perfect. And all things considered, right? It's just going to make you more money. So you really want to take advantage of your time in the trial, right? Of how we're trading, just building up that confidence and understanding what our technique is will remove a lot of your trading anxiety, and that ultimately is going to make you a lot more cash. So I would recommend everyone pursue that, right? Because it's kind of for your benefit as much as it is for mine. Because the more that you know, the more information you have, the more you actually get out of what we're teaching and trading here on a daily basis. And once you have that context in place, the market kind of slows down for you and you're able to make much more deliberate trading decisions. And being deliberate as a trader is a superpower that we all want to embrace. Yeah, we've not missed out on bupkis here, right? Markets have very much stalled. We've been above our entry price, two candles, or sorry, our exit price, two candles in the last hour, yeah, last 50 minutes. So we've not missed anything. Honestly, Rick, it's a good question. So, how long can it take someone to replace their corporate day job income from this type of trading? I think that that's kind of like a personal question for each individual person. The I'm Canadian, so for me, maybe it's a little bit different than you if you're based in the States. But for a lot of Americans, I think the hardest thing for them to like replace or to get comfortable with is their health insurance situation. And so finding a way to manage that for a lot of people, I think is probably the biggest like factor that slows them down when they're switching from corporate to self-employed in general. I think that that probably is the biggest mental burden for a lot of people. As for how long it's going to take you to feel confident in trading full time instead of working a 9 to 5, it's going to be a little bit different for each individual. How much savings you have, what your personal risk tolerance is, what your partner or spouse thinks about it. So it really is hard to give you like an absolute answer. My my goal with this trading program is for your first month to be to learn the strategy, create that proof of concept, pass your evaluation. For month 2 to be about getting funded with your first account and getting your first payout, and then month 3 scaling your trading accounts and increasing the size of your payouts. From there, right, once you're trading with, let's say, $600,000 or $1 million worth of capital, and you're even just making 2% a month, well, at that point, right, you're looking at, say, 20 grand a month. And for most people, I would reckon that that probably replaces their day job income. But making 20 grand once versus doing it 2 or 3 times and compounding it into something pretty special can take a bit of time and a little bit of like it just requires different confidence, right, for each individual person. So some people want to see them do that for a year, some people want to see them do that for a month. And yeah, where you fit in there is kind of a bit of a personal question. What my job, right, then when you choose to work with someone like myself, is to help speed up that learning curve and basically give you the support, coaching, and feedback you need so that you're pursuing that at the pace that you want. And the more that you participate, the more that you jump in on the one-on-one calls, and the more trades that you submit for feedback, the faster that's going to go. But yeah, for everyone, there's going to be a million different variables. Good question. Any other questions here, team? All right, so I'm going to go final call for questions here. Final call for questions. All right, final call here. Final call, or forever hold your peace. All right, sweet team. So yeah, same deal like always, right? If you have any questions, hit me up outside of market hours. Otherwise, looking forward to catching up with a few of you here in our one-on-ones later this afternoon. And if you're a DTR guest and you've been on trial here, make sure you reach out to your DTR advisor, jump on a call with them, join the team full time, and we'll help you find some consistency in your trading. So have yourselves a great day, team. Another great session here. Stoked on how we traded today. Very happy. That's putting us for a nice little green streak here in the last couple. So was that 6 days, 5 days now? So pretty good. Let's see if we can keep stacking them up away here, keep maintaining that control, and everything else will fall into place. When we give away basically our ability to be the one who knocks, that's when we start to struggle, right? It starts to be when the market doesn't reward us anymore. So the emphasis here always control the variables we can't control, be the best version of myself that I can be, and the market will reward that individual. So appreciate you guys all jumping on here today, and we'll see you tomorrow. Peace.